Good morning, guys. Welcome to this Thursday, October 23rd. Halloween is just around the corner, I think. It's getting pretty close. Anyway, market yesterday was not in a great mood. Nice little move to the downside, and we had a pretty good retracement towards the end there. But we ended up closing around about that 67.30, not quite above the 50. So borderline if you want to start the range bound or not. I think I mentioned the 50s as the spot to go back range bound. It was probably 30 I was talking about because that's where we ended up closing. I believe yes, the view was closing right at that level. So it's just borderline which side you want to be on. Starting range bound is always a safe bet when that happens. We had a little bit of strength in the overnight, start trading higher up to the 50s, and that's pretty much where we are. But it stalled and then starts trading back down again. Still, government shutdown, no news coming out. We do have the CPI number coming out tomorrow. That's going to delay number. They pulled everything together, so we'll see how good that number is. But you're going to get a CPI read tomorrow, and that's about it in terms of news. The other stuff we got is earnings, Tesla report. I haven't seen a big reaction on it. They're a little bit down this morning, down $17. They're probably not a spectacular thing on the upside, but uh, it's not totally falling out of bed either. But to the downside on Tesla, so I was expecting a bigger reaction on Nasdaq. I didn't see much of a reaction at all. So, but the earnings reports are the ones going to dominate the next week or so of news as the big tech comes out and reports earnings. That's the best barometer we have as long as the government is shut down in terms of news and how things are going. The U.S.-Chinese thing, relationship calmed down, and they haven't heard a lot of stuff going on there right now. No crazy headlines coming out of posturing. So that calmed down a bit, but watch out if that headline comes out in relation to that a tariff threat or something like that. The market has a definite reaction as well to it. And also, if you heard, yeah, I mean, the reason oil is popping now, finally figured that out. It's because they put these sanctions on Russia. They sanctioned two of the big oil producers there, so that's the short-term spike in oil, and that's going to be probably offset pretty quick by other production. So I'm not worrying too much about that. But in other words, if they cut off the Russian oil, Chinese and India is going to buy their oil elsewhere. In other words, you need more oil in the market to keep prices stable. Anyway, so starting off right now, where we are range bound, I would actually start off favor the short side right now. Uh, Given that little pullback they have yesterday. They ran it up Monday, we stalled, they ran it back down. We could just be stuck here going sideways today. But I would start off with a slight bias to the downside because there was pretty good selling going on yesterday, and we may find ourselves testing that 66.95 in today's session. And if it holds, maybe you have a better shot at staying range, but maybe even stage a comeback. We're still in October, still have a lot of cross currents. The government shutdown is going to start leaning on the market at one point. Earnings report, we're going to come out. I think the earnings report so far has been fairly decent, and so the market hasn't totally reacted negatively to them. And of course, we'll see what happens towards the end of October here as the U.S.-Chinese meet in South Korea. So I think that meeting is still on as far as I can tell. But that's changes. I mean, we can only deal with what we know and hear and get what gets reported in the news. Which, in other words, make sure you pay attention to the news, financial news specifically, and go get a few different perspectives on things. So starting off range bound, looking to sell strength 67.50s, 67.60s for rotations back down. Looking to buy against the 30s too late, but the 20s, 67.10s, 66.95s to 6700s for rotations back up. So and I would be looking for that retest of the lows to see if they can get there. That would not surprise me at all. If they run it even down to that 66.80 would not surprise me, but anything below that, I think we are in trouble in terms of where they're going to head. Because I mean, we could certainly, I mean, it would not be completely out of this world if for a little bit of a pullback to kick in. But as you can see on the capital flow chart, they're going to have to take out the levels down here at the 6650s before we was 6630 to 50. That would be the levels to take out if we want to see some a correction in the market. So as long as we trade up here, we're looking at trading above that 6700 edge. In other words, are we trading in this lower distribution or this upper one? So a little bit more of a correction would not be considered any big change in capital flow at all. Even if it feels like the market is pulling back, no, not too much to worry about, at least yet. They start taking out these lows here at the 6630s to 50s. Yeah, I would start thinking about the short side a lot more aggressively at that point. Then we have a correction going on. So right now, still trading in this upper range. As long as I hold this 6700, we have a shot of trading right back up again. So this pullback has not quite turned into knocking off this lower edge at the 6720s. You see that nice volume edge right here at 67, 15 to 20s. If that comes out, that gets us right back in this lower range. So selling against the 6750s and 6760s. I'm going to buy against the 6720s, 10s, and the 6695 to 6700s. So that's how we get started this morning. Let's see if this is going to turn out to be more of a sell-off day or if it's going to be more range-bound stuff. Usually, and you paid attention to the morning action, you don't get usually a big reaction right from the get-go. It takes an hour or two, and then they see them lean in on the short side or the long side. If they immediately start taking off, they start selling or buying right from the get-go, I think then you have a pretty good answer right there as to what may happen. But usually you get a little bit of slop in the morning, and then they start seeing the direction and move to either to the upside or the downside. But early on, I'm going to be looking for the action before the London close to see if they're going to take it down here and retest that 66.95. That's kind of the expectation I have. Let's see if that turns out to be true or not. On the bonds and the Nasdaq, the bond market to the downside in the overnight, back down here in the 118s. Nothing really to worry about yet. In the bigger picture, it doesn't look like much. Just back in this lower range. They were probing out to the upside, the 1916. They're back down below in the 118.16 range. So I would start off range bound, a slight bias to the downside. If they trade up above the 119, we are back on the long side. Otherwise, I would stay range bound and keep that short bias. We'll see if they can extend to anything further to the downside. Chances are they can run it down all the way down to the 1720s. So there's some room on the downside. And we'll see how they shake out here. But right now, starting off with a slight bias to the downside, looking to sell strength, 1826s, 1830 to 119s. Above 119s, just take off the short bias and go back range bound and start. I would probably start leaning towards the long side. So let's see if this will move to the downside. It gets any further continuation or has any legs. All right, so that's the bond market. I'm watching that every day carefully, but I mean, you see stuff like this. It's like this is institutional selling when it looks like that. So slowly grinding it to the downside. That's the trickling out stuff, but net selling across the board. But they say a lot of the times when you get a little bit of a rotation, you have pretty good opportunities for retest failures in the bond market. They work pretty good. Nasdaq looks like it's weakening a little bit. Also pretty good pop to the upside before the close, but not quite to the point where you want to be starting take off the short bias. I pretty much started off range bound going into the overnight. I forget what level we talked about there. I believe it was the 25,000 was the above or below that one. We were going to lean long or short, or short versus range bound, I believe it was from yesterday. But at this point, I mean, I would stay on the short side, starting off looking to sell strength for rotations back down. Nasdaq feels a little bit weaker. They were taking out this edge here. The ES is kind of right there testing their edge. Nasdaq has pretty much taken it out, and they've been down probing below it. So I would not be surprised if Nasdaq gets it all the way down here to retest that low at the 780 to 900, 780 to 800s, that 24, 780 to 800s. Retest that low in today's trading. I'm going to make that a little bit bigger in a second here. That level, I tend to get that a little bit wider. Let me see. There you go. You do this like that. All right. So what I'm thinking here is down here that's going to be the 800s has been this little volume edge here. They come down to that one. We have two levels, 860 and the 820, 800 to 820s. That both of these level comes out. I think we are in pretty good shape to run down and retest these lows at the 600. But right now, at least the first step is to look for that retest of that 800 level and see if they can take it out. Looking to buy against these areas on the way down though. So 9 and with a little bit of caution since we have a slight bias to the downside. So looking to buy against the 950s, 900s, 860 to 70s, 800s for rotations back up. They're going to sell strength against the 2500s, 25 100s or 120s, 25 160s up to that level, the 25 200s. The 25 200s is going to give us a good indication that we are back up in action. But already here at that ledge, the 25 100s, which is the session highs, there's a nice ledge right here. That's going to be a good area for shifting your bias for the day session at least. But so I'm looking to sell strength at 25,030s. This level here at the 980s, sure, but we are trading pretty close to it, so I would not be leaning towards that too aggressively. But the 25,030s, the 100 to 110s, 160s up to 200, above the 120s. If that comes out, I would probably take off the short bias and go back more range bound, see if they can push this higher. But so far, it looks like we're getting weakness going into the session. And we're up here flirting with the highs, and now they can be kind of seeing this kind of coming apart a little bit. So, and if you see that 24,800 comes out, I think, yeah, it could be a start. I would stay on the short side at that point and watching it down to the 24,500 to 600. That's where we really start worrying about the changing capital flow. But right now, not so much. So it could be an orderly sell-off in progress right now, and then we may see it take it a bit lower as well. So on the Nasdaq, you see, and the reason I'm pointing at Nasdaq right there is because a lot of the big tech stocks and the high flying stocks have been flying around on the Nasdaq. So they start taking out these areas down here. That's when you have to worry about the short side and a potential change or a potential correction in the market. And then I would not be surprised. I mean, we've been overdue for one. So if that kicks in, that would be a little bit of pain, but otherwise the overall setup is pretty good. So chances are we may get away from it this time around, but we'll find out. We'll leave it there. So that's the ES and that's the bonds and the Nasdaq. Finally, oil and gold. And on gold, as I said yesterday, just kind of stay away from it unless you really, really, really want to trade it. It is pretty crazy. So here's your gold. Yeah, I thought I shifted that. There's Here's our gold. They are holding around the 4100s. They bounced a little bit of the lows here from yesterday. It's a little bit of strength here. Remember, we took out these areas, the 4,080, 90s, 4100 area, I should say, more and more. So these two areas, the 4,077s and the 89 to 90s. Right up here to 4108. So 4100 generally around there has been the area they traded back up of, kind of changed the downwards trajectory a bit. Let's see if they can make it go out of it and start trading higher again. So far, the overnight has shown some promise. But gold is so volatile, so this could just be a bounce of the lows, and we may see them right back down again. And I would not be surprised if that happens either. See them retest the lows, the 4,000 lows again. So we'll see if this was it for gold. A couple of days of massive selling, and it's just crazy volatile. So I would stay probably on the I would say range bound right now. If it starts trading below that 4,090s again, back on the short side pretty aggressively. And if you want to be more aggressive above that, below that 4107, probably stay, look for a short trade. But gold has been so volatile, I'm just kind of staying away from it. These bars are huge. I mean, this bars ahead of it is 17 up to 23. Yes, that's 7, 8, 9, 10 points plus, and it's just not tradable. So you need to have the good setup at the level and hope the edge holds. That's when you can enter it with a good trade location. But it is a sneeze if you're going to be able to stick with that or not. So that's gold. I would just stay away from it right now until it comes down a bit. And oil, and here we have it. So the sanctions on the Russian oil companies is driving this now to the upside, and that makes sense. So that we have a good explanation for it until the market kind of offsets the potential volume drop off. We'll see how the sanctions shake out. But that's why the futures prices are to the upside. So I would expect them to run right back up at 63, 64, maybe even higher. Depends on how the market reacts and how effective these sanctions are. But the short-term pop on oil prices because of Russian sanctions being put on. And I would think that since oil prices react like this, the sanctions are probably going to be pretty effective. So there's going to be some pain on the Russian economy. And once they can clear that war, the Ukrainian, the war in Ukraine, Russia, if that can be resolved, then I think oil can just absolutely tank. But so far, we'll see. They can make it, so but that's the reason it's trading higher. And I would stay on the long side right now in the short term at least until we see some response to it. But pay attention to the news and the financial news about what comes out of these sanctions, if they're effective or not, and how they're going to offset it. If you start seeing oil producing nations offset that with additional production, I think you'll see oil prices come right back down again. If not, probably going to stay up a few bucks here for a while. All right, so that's oil and gold. So I would stay on the long side on oil, looking to buy weakness against the 6140s, 6080s, 6050s for rotations back up again. Below that 6040s, the London low, maybe one level lower at the 6015s, but below that London low, looking for a potential move to the downside again. If they take out this edge, 6130 could be a nice retracement trade, a nice short trade down here to that 6070 area, 6080, 70 to 80 area. But that would be on a short I would look for in the early going, if you can get on a good trade there. But otherwise, I would look to buy against these support areas for rotations back out. All right, so that's oil and gold. Here we had the charts for those. And let's see, back to the ES. And okay, weakness persists a bit. NASDAQ also a little bit of weak, but they're still just testing that session lows. So let's see if they start taking out the session lows, starts running it down towards the low of yesterday. But that's my expectation. See if they're going to get the retest of these lows in the session. If not, I think the market is a bit stronger than I thought, but we will find out. So we'll wrap it there. Good trading, guys. And I'll see you back at 11:30 for the next update. Later.